commercial vehicle segment. What's really happening there? Is the sector really poised for a volume growth recovery? And what are the factors that are play? Let's try to decode that with Mr. Vinod Aggarwal, MD and CEO of VECV, joining us on the show right now. Hi, very good morning, Mr. Aggarwal, and thank you so much for your time. And firstly, let me start with the predictions related to the monsoon, and we are already seeing the early onset of the monsoon. That generally helps the rural demand to pick up in some or the other sense. So if you can start by telling us that for you, how is the rural demand shaping up? Is this matrix making any sort of a difference? And along with that, for FY26, what are your growth projections? All right, Mr. Aggarwal, I guess you have to unmute yourself and please help with your take.
Sorry. Absolutely, you are right that monsoon is a very strong driver for the entire economy, specifically the rural economy. And the rural economy is very important for the auto sector as well. So therefore, it's a good sign that monsoon is expected to be good, and it will be good for the commercial vehicle industry.
All right, but along with that, Mr. Aggarwal, are you expecting the broad-based growth, or will it be led by any specific segment? Because I remember the last time we connected with you, it's been months, but you were very positive on the category of the growths like bus segment as per se. You were also bullish that in some upcoming months, the tenders with respect to the EVs will pick up. So what are you bullish on right now?
I think before that, one or two more positive factors which are there, which are going to drive the growth. First is, you have seen the interest rate, they are moving southwards. We have seen 100 basis point cut by RBI in the last monetary policy. And we have also seen cut in the CRR ratio by again 100 basis points in a staggered manner. That is going to infuse more liquidity in the system, which of course will also make the more finance available for retail financing. So all these are very, very strong factors to drive the CV demand. So therefore, cut in the interest rates, monsoon positive, and high replacement demand, infrastructure investments, good economic growth. These are all very, very positive factors which point towards good commercial vehicle industry in the current year. Now, as far as which segments are going to do better, you have rightly said, schools are continuing to do very well. Even in first 2 months also, the schools are the demand from schools for buses is growing. And this is, of course, a school season also till the month of July. And of course, the demand from the staffing segment as well as for intercity coaches. So therefore, the entire bus segment is doing very well. And we are likely to get good tenders on the electric vehicles. Already one tender of a very large number of buses, around 10,900. That's on the card. We are expecting that to open very soon. And after that, of course, financial year 26, we should see another tender also coming up. So therefore, electric buses, we should see good traction in the coming year. Then apart from that, if you look at the trucks demand will be driven by infrastructure investments, and of course the demand from tippers, and for haulage also, since the economy is growing and replacement demand is continuing to be strong. So other than the geopolitical factors, I think all other factors in India are very, very positive.
All right, hopefully, and we look for a rebound in this segment. But Mr. Aggarwal, I'm looking forward to two numbers from you. Firstly, yes, you are positive on the growth outlook, but for FY26, what are your projections for the industry growth? Because after that FY25 numbers, it was somewhere around 1 to 5%. That was a broad range that analysts came up with. So would you stick to that, or you are expecting a better growth? And secondly, onto the EV tenders you talked about, how big tenders can these be? Any numbers that you can share on that front?
As far as the growth is concerned, if you look at the first 2 months, the YTD growth in 3.5 ton and above, that is around 3.5%. The growth in the month of May, it was 4.9%. And if you analyze further, that growth also has been driven driven by light and medium duty buses and the bus segment, light and medium duty trucks and the bus segment and exports. Heavy duty trucks have been sort of flat in first 2 months. So therefore, we are expecting more demand coming from construction trucks in the after the monsoon period. So therefore, I expect maybe the growth could be between 5 to 10%. That's what my estimation is. It will be single digit, but it could be between 5 to 10%.
All
And
right.
the second question on the electric tenders, the tender that we are expecting to open, that is around 10,900 buses. Other than that tender, there are already electric vehicles which have already been ordered and they are under delivery by the industry. That number is also quite big. It is around 18,000 numbers. So 18,000 plus 10,900 is going to open now. And if there is another tender in the balance part of the year, so therefore there will be, you can say, the orders of around 35,000 electric buses, which will be pending to be delivered in the current year. However, the capacity of the industry to deliver so many buses is not there. Therefore, I am expecting the delivery will be much lower than whatever orders are there. So that's the current situation on the electric buses.
Right, very interesting data points over there, Mr. Aggarwal. But one of the other recent news flow was with respect to the mandate coming in on AC cabin norms for MHCV that have already come into effect. We have been discussing this issue for a while now, but of late, did the company take any more price hikes to absorb the additional cost? Have you already taken some? Are you planning to take some more as well?
Yes, of course, the AC cost will have to be passed on. Already some increases are on the cards because right now the ACs became effective from 8th of June, and but that is applicable on the manufacturing rate. So there was some inventory which is there in the pipeline. So once that inventory is exhausted in 1 or 2 months, then the trucks with ACs will start selling maybe from July or mid-July or end July after all the inventory is exhausted. So and that time, of course, the price increase will be there, and we are expecting the price increase of 1 to 1.5%. Other than that, another factor that is also pushing the price is the steel price increase, because after the imposition of safeguard duty of 12%, there has been some increase in the steel prices by around 2.5 rupees per kg, which is also proving to be inflationary. So I think the safeguard duty is also contributing to the inflationary pressure on the industry.
All right. Thank you so much for that clarity, Mr. Aggarwal. But since you have been tracking auto industry for so many decades now, and I have to ask you this, that auto industry right now seems to be facing pressure due to the rare earth magnet shortage. Firstly, if you can help us understand that is the commercial vehicle industry and the segments, especially like EVs, or in SCVs, rather the bus category, where there is a lot of penetration, or rather better penetration with respect to the electric vehicle segment. Are they seeing any impact due to the supply crunch? And as an industry as a whole, where are we? How are the discussions going between the players, the government and the related parties?
Rare earth magnets are impacting the entire industry, including the commercial vehicles. And as you rightly said, in the electric vehicles, the impact is very, very imminent because the motors that include the rare earth magnets. The magnets with the normal metal of ferrous, that of course is not the problem, but that increases the size of the component. Therefore, the rare earth magnet is very, very important for some of the components in the products. And both the trucks and buses are equally impacted. But as of now, there is inventory with suppliers and with also the companies, maybe for 2 to 3 months. And in the meantime, all the component makers, they have made the applications through the Embassy of China. And now all those applications have been approved, and they are lying with the Chinese government for further approvals. Hopefully, this thing should get resolved in next 2 to 3 months, and we are also taking up through Government of India, through our embassy in China, to take up with the Chinese government to give us the faster sanctions or faster approvals. So we are expecting that the problem should get resolved in next 2 to 3 months. And in case this is not resolved, of course, it will be a challenge for the entire industry.
All right, and we hope this gets resolved anytime soon. But thank you so much, Mr. Aggarwal, for taking the time out and speaking with us this morning.
Thank you. Thank you.
All right, now with this, viewers, let's also tell you what's really happening